Welcome back to the investment challenge. Today we have a very interesting topic because we are going to talk about how we are going to pick stocks. More specifically, we are going to talk about the fundamental data ratios. I don't know how to call it correctly, but we are going to talk about the fundamental data that a stock has to, or let's say not data, let's say fundamental criterias that a stock has to fulfill to be on my watch list. And this is my sheet, my Excel sheet that I used in 2019. And I found it on my PC, and we will just going to use this to start our investment challenge, because I already know from the past that these fundamental criteria work really well. I traded with them for multiple years and outperformed the market. So they are a very good guideline, and we will just start going through them one by one. Let's start. Some of this is in German, but I think most of the stuff that's in here should be also readable for English speaking people. So let's start. Here's just the instrument ticker, then the company name, what sector they are in, and if that sector is cyclical or defensive. I talked in other videos already about the importance of picking cyclical or defensive stocks. That is really I don't know if it's the right word, but it's dependent on the where we are in the business cycle. Is the GDP contracting? Is it expanding? And if it's expanding, you want to invest more in the cyclical stocks. And if it's contracting, you should look to buy defensive stocks. And so let's start with the first fundamental criteria. That's the PE ratio. It's basically, or it's a short form, it's price earnings ratio. It's the stock price in comparison isn't the right word, but stock price divided by its earnings is the PE ratio. And in 2019, my baseline, or my my wanted I don't know how to call it. The PE had to be at least 30. And I'm still looking at companies that have at least a PE ratio above the market average. And the S&P 500 at the time, or at today, has a PE average at about 22. So in the coming weeks, we are only looking to buy stocks with an PE ratio above the 22 reading, because as I said, I have a lot of experience in trading those stocks, and it's always better for short-term positions when you use stocks that have a higher price earnings ratio. The next is the forward PE ratio, basically the PE ratio in the future. It's an expected value. The earnings of a company are there are forecasts for it, so you can somewhat predict it. And here I'm just looking for a higher PE ratio than the market average. The next thing is the earnings growth from the most recent quarter. This means MRQ. This is just the recent quarter in comparison to the quarter before that quarter. And yeah, it should be above 15%. And then we have the earnings growth TTM, which means trailing 12 months. And it should also be above 15%. And then you have the revenue growth MRQ. And it should be above 10%. And then the same ratio for the trailing 12 months. And then you have debt equity ratio, which is, I think, self-explanatory. It's just the debt of the company in comparison to its equity, and it shouldn't be too high. I think it's pretty clear why. If you have a company and you have a lot of debt and the rates go up, you have to pay a lot of the costs for that capital back. And that, of course, will drive down your profits. So it shouldn't be too high. Then you have the ROE. This is the return on capital, which basically means if your company capital is, let's say, 100,000, and after 1 year you have 125,000, your ROE would be 25%, and it should be at least at above 15%. Here you have the market cap. This is a criteria I will definitely, this is more like a soft factor for me. I like stocks that have a big market cap, but as you can see, here are a lot of stocks that have a pretty low market cap, or not low, but it's not so important for me. Then the beta, that criteria basically shows you how volatile a stock is, but that's not very good explained. Let's say when you buy Apple stock, and Apple is in the S&P 500, and let's say the S&P 500 goes up 1%, and Apple on that same day goes up 2%, then you would basically have beta for Apple for that day of 2. So you can measure, let's say how volatile that stock is in comparison to the stock market. That is important. That will be important later in our process to determine how much should we hedge against that position. Not the best explanation, but as I said, it will become clearer in future videos. Then we have the performance in the trailing 12 months. So just price performance in the last 12 months. Pretty easy. Then you have the price performance in the last quarter. Should be above 0. I like to buy stocks that are making higher highs. Of course, then you have the next earnings date, which is just important to know because you want to know when earnings are coming out, so you can react to that. You can read the earnings statement. That's always very important. So here's just some space to write down some stuff to that that is important to that stock. And yeah, that are the most important ratios that we need. As you can see here, this is the criteria the stock should meet, but you can see with nearly every stock there's some field that is not completely green, and this is completely normal. It's very unusual that a stock has all criteria met. So I'm always looking for the best, as you can see here, 30 to 100 stocks that are most near to this optimal criteria ratios. But as you can see, almost every time one of the criteria is not met, which is not a problem. You just have to look at it and then decide if you still want to buy that stock. And this was, I think, the most important stuff regarding this topic. This will be our criteria that we will use to buy stocks in the future. Maybe we have to do just some adjustments because this was 2019. The market was in a different stage back then. Now it's much more, let's not say difficult, but it's a different time. We have different risks. So the PE ratio might be a little bit lower that we set here. And also some of that criteria we maybe have to correct a little bit to the downside. But now you know what you can use in your own analysis to determine if a stock is worth buying. And I should say here, this are criteria for stock trading, so not investing. I'm not holding on to stocks for 5 years. I'm looking to buy them for 3 to 6 months, maybe 1 year if they are really going crazy. Then you can hold on to them longer, but I'm just in for the money, let's say. I just want to hold them 3 to 6 months, and these are my criteria. Yes, enough for now. If you have any questions, please leave your comment below, and I see you soon.